And guess what? Because you've basically bought your equity for free, you can give some of it away to a GM, 10, 15, 20%. That's what I normally do. Then that person's your partner in the business, but they're driving the other 80%, which is your value.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today. Hello, Pillars of Wealth Creation listeners. I'm your host, as always, Todd Dexheimer, and with me today is Carl Allen. Carl, how are you doing today?
I'm great, Todd. Thanks for having me.
Yeah, thanks for being on the show. So Carl is an entrepreneur, investor, corporate deal maker, has worked on transactions worth over $50 billion, which includes over 250 acquisitions and sales, together with more than 100 capital fund raising projects. And I'll let you kind of explain your business, because I don't want to butcher it too much and just read what you're doing, but you're buying and selling businesses. So why don't you tell our listeners kind of a little bit more about what you're doing, and then how did you get into it?
Okay, so basically, I have a network of just over 1,200 entrepreneurs that I coach through my program, and what we do is we go out and we're buying businesses up to about $5 million a year in annual revenues, and we're buying those businesses basically using OPM, other people's money. So we're targeting retiring baby boomers or large corporates that have very small businesses that they don't want to own anymore, and we're buying those businesses without investing our own capital. So we're using asset-based financing by using the balance sheet assets, or in a lot of cases, we're just buying the business and we're paying for it over time. So as I mentioned before, I've just come back from Los Angeles. I've just bought a media business, a fantastic business, and I bought that business, no money down, and all the payments to the seller are going to come over the next 3 years, and those payments are going to be made using the cash flow that the business is generating. So it's a lot like a real estate kind of investment. And I've been doing this since 2008 when I retired from the corporate world. I grew up on Wall Street. I was an investment banker for Bank of America. I spent my early years doing mega deals for the likes of GE and Boeing and IBM. And then after business school in Chicago, I went to work in private equity. I invested in a company, a software company that we sold to Hewlett Packard. And when that deal closed, I went along to HP as part of that deal, and I was one of their mergers and acquisitions directors. So I was flying all over the world doing, massive deals and smaller deals for HP. And the big inflection point for me was February 2008. I was in Moscow, of all places, buying a company, and my wife was 36 weeks pregnant at the time with our son Josh, who's now 10, and I got the call, the dreaded call. It's like, Carl, I said that you could travel. Okay, well, my waters have broke. I've gone into labour. I'm in the back of an ambulance. You've got to get back to England right now. So I picks up my phone, my wallet, my passport. I runs out into the street, which in Moscow is not a safe thing to do. Back a cab, got to the airport, jumped on the plane, and I got back to the hospital about 5 minutes before my son came out. So big kind of life moment for me, and I'm sat there with my little boy in my arms, and I'd missed most of the pregnancy, basically flying around making people lots and lots of money. And I thought, I can do this for myself. So
Sure.
So I retired, and I started up my own investment firm. So buying businesses, growing businesses, and selling businesses. And then about 3 years ago, I just got inundated by people saying, why don't you teach this stuff? Can you coach me on how to do this? So I started coaching people, found out I really liked it, and then built a formal coaching program where I could take, entrepreneurs or employees or, brokers, real estate investors, and take them through my proprietary system on how to find a business that, really appeals to you, how to build great rapport with a seller, and then how to structure a deal that's a win-win, but doesn't involve you as the buyer investing any of your own money. So that's what I do.
So very intriguing business. So you're essentially, I buy multifamily, I buy apartments. You're essentially buying a business, just like I'm buying an apartment building.
Yep.
Obviously different deal, but
Yep.
so it's really the same. Was it, so your background though with HP was buying companies for HP is
Yes.
acquired. So you kind of had this already background.
Yeah. So I had the corporate financing background. So I knew how to transact a deal, and that's actually the easiest part. So put enough deals in your funnel, and you build rapport and relationship with the seller in the right way, you can buy that business in a lot of cases without investing any of your own personal money. And the main reason is, if you look at the market today, there's about 2.45 million businesses for sale just in North America alone, and only 1 in 13 of them will sell in the next 12 months. And baby boomers, according to the Wall Street Journal, there's 10,000 of them retiring every single day. And Inc. magazine recently stated that 19% of them are small businesses. So you've got all these businesses coming to market, and there's a massive lack of buyers of these small businesses. If you own a $50 million business, it's pretty easy to sell it to a $200 million business. If you've got a $2 million business, a $50 million business is not going to buy that business. They're going to buy a $10 or a $20 million business. So all these smaller businesses that are out there, no one's really kind of buying them. So it's a lot. If you know where to look and how to structure the deals, you can pick those businesses up without having to invest your own money.
So when you're buying that deal, then you just said not many people are looking to buy it. So what's the strategy? Is it just to make money on that deal and hold it kind of long term, or are you trying to build it to a level where now somebody will acquire it? Are you building it to that $10 million?
Yeah, so there's multiple ways that you can make money from doing things like this. So some people in my program that I coach, they will buy a business and they'll flip it. So
yeah,
they'll buy it off a baby boomer. They might spend a couple of months in the business just kind of polishing it up, and then they'll flip it for a good return to a trade buyer who's a competitor. The other thing that you can do is you can buy a business, and then if you know the sector, and you sense a great opportunity to scale, like the media business I just bought in LA. Our goal is to 5x the revenues in that business inside of 3 years. Pretty easy for us to do. We bought it off a 64-year-old retiree who had just lost interest and passion to keep scaling. Then as we scale and then as we sell, we're obviously going to get a bigger return by kind of buying and holding. A bit like if you'd have bought Facebook on the day of the IPO and you sold it 2 days later, you'd have made some money. But if you sold it today, you're probably making 1,000 times your investment. It's the same thing in a small business transaction. But what a lot of other people are doing as well is if you look at the market where you've got the 50 million guys and they're only going to buy 10 to 15 million guys, and you've got all these little kind of bottom feeders, then there's people doing something called roll-ups, where you buy several of these businesses, you bolt them all together, you take out any kind of duplicate cost, and then it becomes a very attractive business, a larger business for a larger acquirer to take over. So roll-ups are working in web design, digital media, kind of SEO agencies, chiropractors, psychiatrist companies, CPA practices. I'm seeing roll-ups all over the place. One of the guys from the UK that's in my coaching program, he was an optician, an optometrist. He bought his first business 4 years ago when I was kind of beta testing my program. He now owns, I think, 63 of these things. He just keeps buying, and plugs them into his model, and just works really, really well. So there's lots of ways as a deal maker that you can you can make money from this. There are people that come into the program and they don't want to own a business. They just want to broker deals, for others and get a piece of the deal in equity and get fees as well, just for being the person that's project managing and getting the deal over the line.
Sure, that makes sense. How do you find a business like this? It's not like they posted it on on Craigslist, or maybe they are. How do you find a deal like this?
So there is quite an established brokerage network. So for example, in the US, bizbuysell.com, they're the largest online broker of businesses.
Yep.
They have over 100,000 businesses for sale. So, and a lot of those businesses, they've been on there for a while. Once those businesses have been listed for at least a year, they're pretty easy to scout down and do as no cash down deals. But most of the deals that we get are from networking. So we have a lot of sophisticated social media. We do a lot of work with LinkedIn. We go to events. We're leveraging a lot of networking opportunities, because what's interesting, only about 20% of businesses that sell actually list with a broker. One of the reasons for that is if you own a business and you list it for sale, then everybody finds out about it. Your employees get nervous, your customers get nervous, and a business owner doesn't want that kind of anxiety. So what they typically do is they'll talk through their network. So they'll speak to their bank, their CPA, they'll talk to their attorney, they'll talk to their major customers, their major suppliers who they trust. So if you're networking in that sort of area, you can get some very, very good quality deal flow. And what's great about originated deals in that way is they're what we call off market. So if you went to bizbuysell.com and you said, okay, I want to buy a web design business within 50 miles of Chicago between $1 and $3 million, you do that, you get a listing, you get the information on that business. There could be 5 other people looking at that deal. If you network and find a deal, in most cases, there's nobody else looking to buy it. That's how we did our media deal in LA. That's how I'm doing the engineering deal I'm doing in the UK right now. I'm buying a huge construction business in Orlando. Again, that just came through the network. So, it's amazing. That's what we typically do.
So what are some tips of networking? I mean, what kind of networking are you going to, or are you doing?
Yeah. So what's really interesting. So if you look at, the 2 killer apps that we use to find deals, believe it or not, it's LinkedIn and Facebook.
Hmm.
I could put a post out on my Facebook page, my personal Facebook page, and say, hey, I'm looking to buy a type of business in a type of location.
Really?
And, if you know anybody that's looking to sell the business, get them to contact me. And, I'll make that post within 24 hours. I've got 50 leads, which,
wow,
I can quickly vet. I can vet a deal inside of about 5 minutes. And
yeah.
I coach people on how to do that. First deal I ever did was a $57 million deal at Boeing. It's either Boeing or GE, I can't remember. And that took me like a month to vet that deal. I can vet a deal now in under 5 minutes. So you get a lot of opportunities, and you quickly filter out the good from the bad, and then you work. It's like a sales funnel. Then you work on those kind of high probability targets. Again, with LinkedIn, if some people that are employed probably can't use a LinkedIn profile, but if they can, if they're not employed or they're fine using LinkedIn, if you put on LinkedIn, you're a small business investor, and you start doing some of the LinkedIn marketing tactics that we coach, you'll get inundated with leads, because everybody wants people to invest in their businesses. And then when you go and you have that meeting, we flip that around to say, hey, I don't want to invest in your business. I actually want to buy it. And that's even better, because I think, wow, okay, I don't just need to sell 20%, I can sell 100%. And then if you get the right seller psychology, that, they're burnt out, they want to retire, they're sick, they could be dying in some cases, or they've just run out of ideas, they'll let you use the business's assets and resources to raise the financing to be able to basically buy the business from them.
Wow. Interesting that Facebook and LinkedIn is a good resource. Because I can't just go on to, if I go onto Facebook today and I post, hey, I'm looking for 120 unit plus multifamily value add in this market, I'll get zero leads. Zero good leads. I might get a couple of people to say, hey, I got something, but zero good leads.
What we also do as well is, like on Facebook and LinkedIn, we post a lot through groups.
Sure.
Rather than you broadcasting out to your friends and family, if you can join a group on Facebook or on LinkedIn that's in your niche of choice, in your location of choice, and you start posting and saying, hey, I'm new to the group, I'm looking to buy a business in this market.
That makes sense.
And then the key line is, anybody got any tips? You don't need tips, you just need deal flow. And when you ask for tips, you get deal flow. They'll say, hey, my buddy that I play golf with, he owns a business like this, and he's pretty frustrated. He's looking to sell, but has no idea how to sell. Most American small business owners, they don't know how to sell a business. Back in the day, 25 years ago, the owner of a family business would hand it down to the son or the daughter. But today, they want to go to college. They want to be doctors and bankers and lawyers. They don't want to take over dad's engineering company in Pennsylvania. They want to go and work in the legal market or be a doctor. So a lot of these owners, they're sat there thinking, well, how do I sell this thing? Do I just close the door? Do I turn off the lights? A lot of people do that, which is a shame, because they're getting zero for their business, whereas we can take it on and pay them some of the cash flow that the business is going to generate in the future. So it's a win-win for the buyer and for the seller.
Yeah. So how do you acquire this business, and obviously one of your goals is to raise the revenue and to continue to build that business. Talk to me a little bit about strategies in doing that, especially someone like you who's not just buying one business and that's it, and you're focusing only on that one business. You're buying multiple businesses, probably in different industry, and for surely in different parts of the country and the world, actually. So tell me about just kind of some of your strategies, maybe 3-4 key strategies that you use to be successful.
Okay. So one of the key things that I see a lot, and it's one of the key things I look for in a business that I buy, is, and you'll see this, if you go on bizbuysell.com and you download a one-pager about a business, 9 times out of 10, they will say to you, we don't do any marketing. All our business is repeat customers, and it's word of mouth referrals.
Yeah.
And that's great, because I know within 5 seconds of me owning that business, I'm going to implement some real world marketing. And I'm going to scale that business like crazy. So most businesses, most baby boomer owned businesses, they don't really do any lead generation. They don't do any advertising. They've never heard of Facebook ads. They've never heard of affiliates. They've never heard of SEO. You look at some of their websites, they were designed in the 1990s. They're not optimized for lead generation. So strategy number one is, I put my marketing plans, into that business. And, what I also do is when you look at the customer base that they've already got, they're typically only buying one thing. So if it's a multi-product business, then, we do some things around, bundling together some of our products and services and selling those through into the customer base. You'll also find in a lot of cases that they haven't increased their prices for the last 3 years or 5 years or 10 years. So that's another way to kind of scale. And what you find with most businesses is they sell on the features of their product, not on the benefits. And when you sell on the benefits, when you're benefit selling, then your pricing can increase. So we do a lot of that stuff as well. And we just inject, a lot more pace and energy and drive into the businesses, that we take on. We look at affiliate relationships. If I'm, one of the businesses I'm just about to buy, it's an engineering business. It's a tooling business that manufactures the tooling for metalwork producers. And, we called the top 20 customers and we said, what else could we provide that you buy elsewhere, you want to buy from us? So, and they told us what they were. So those three things, one of them, there's a nice little bolt-on acquisition I can slip into this business to provide that. The second one is something that I can get through a partnership relationship. And the third thing, we can create and build that inside of about 3 weeks. So it's just asking the customer, what do they want? Find out what they want and, build it and go sell it to them. So, we do a lot of that stuff. And what you typically find as well is with a lot of these businesses, they're just ticking over. You can see maybe it was at 2 million. It's kind of dropped to 1.5, and then it did 1.6, and then back to 1.5. So you can almost sense, when you look at the numbers, you can sense that this seller is bored, they're frustrated. It's a nice lifestyle, but they're looking to do something else. Those are the types of deals that me and my partners, we love to do.
Okay, so I could talk about this because it's already happened in public. My wife's company, not that she owns, but she worked for, they sold recently to another company. And I know it's already happened. They've lost some customers. It's a printing sales company. And so they've lost some customers because of the sale and the transition. How do you kind of mitigate against some of those losses that you're going to get naturally when you take over a company and they go, it's new ownership, new whatever, don't want to deal with them?
Yeah. So one of the key things is, and what we're doing primarily is, we're buying businesses effectively as like first-time buyers. So when we're buying those businesses, we're an individual buying a business, not a corporate. So what you typically find is, if you've got $100 million business buying a $20 million business, they're going to treat those customers in a very, very different way. So, what is a big customer to the subsidiary then becomes a tiny customer to the big guys, and they don't get treated properly, and that's why they leave. So when you own a business and you sell it to an individual or a team of individuals, nothing changes. So what's key in a small business is the culture and the heritage, and that's what we're protecting when we do our deals. So nothing changes. And because we're structuring the deal where the owners, the vast majority of the money that the owner is going to generate is going to come through seller financing. then the owner that's left has got a big vested interest in making sure that the retention of those customers is very, very high. So that's one of the things that we do, both in our due diligence and then also in our post deal kind of planning, to make sure that the customers stay really, really sticky.
What's the best obviously this is maybe a loaded question, but what's the best business type or industry right now that you're finding a lot of value in? And it doesn't necessarily need to be, the best growing industry, but just the best industry that you're able to get a low price and increase and get a lot of profit out of.
Yeah, so that's a great question. And there's two actually. One is in kind of engineering or manufacturing. The second one would be in professional services, so like web design, PR, digital media, advertising, consulting, those types. On the former, what's great about those businesses is they're predominantly owned by baby boomers. Yeah. So they've got that, what I call distressed seller psychology. So the business is fine. It's just that inside of their head, they're done. So that can justify a lower price. And then those businesses have got a lot of assets, and we use those assets to get the business to raise the financing so that we can buy. We're not raising the money, the business is raising the money because the business owns the assets. Yep. So those deals are great, and they're very stable. They're profitable. They generate good cash flow. So those are great deals. And then on the professional services side, those types of deals, they're kind of great for roll-ups. Yeah. So, it's a group of businesses that I own now in Australia. It's got a PR business, an advertising agency, and a web development firm, all within the same entity. They're in 3 different places. One's in Perth, one's in Sydney, one's in Brisbane. So we've got 3 locations with 3 different sets of customers and 3 different sets of services. So we've got this 3-dimensional cross-fertilization of relationships. And those 3 businesses, when we first bought them, were doing just over $2 million combined. And in 18 months, we're now at about 7.4 million, just by selling all the other services to kind of everybody else in this kind of round robin, integrated, bundled offer. And a lot of people think that professional services businesses, they don't have any assets to finance. Well, they do. They have their accounts receivable. And a typical business like that will carry 90 to 120 days of its sales in invoices, and you can finance those. So if let's say you found a business that was doing $1 million in revenue, let's say it was an ad agency, it's doing $1 million in revenue and it's making $100,000 in free cash flow, which is about 10%, which is about the average. The maximum you would pay for that business would be 3x, so that would be $300,000. The receivables alone in that business are going to be circa $250,000. So you can get $200,000 in 24 hours from that receivables book. So that's 200K of the 300, and then you'd probably give the seller 150, keep 50 back for yourself, and then pay the other 150. $50,000 a year for 3 years. And I know I've simplified it, but that in a nutshell in 10 seconds is what we do.
That's fascinating. One of the challenges that and I see is not doing this is, and I kind of alluded to it earlier, and I just want to dig in more about it, is how do you take over? You're not going to be at this business every single day. Nope. So how do you, you're not. Maybe some of your coaching clients are, but you're not. So how do you make sure that business is actually running and doing what you want it to do? What kind of things?
So that's a brilliant question, and there's 2 or 3 little components of that I'll talk about. So the first thing is, when you buy a business, the first decision you need to make is, do I want to be an owner manager or an owner investor? Mm-hmm. So some people let's say they're working for a large company and they want to own their own business. They want their own skin in the game. They want that freedom and lifestyle and pride of owning a business. So some of those people, they'll buy the business and they'll run it because they know the sector. And if you don't know the sector, then it's pretty foolish for you to try and run the business if you don't know how that business works. On the other side, and I would say about half of the people that I coach, they'll go and buy the business to run it themselves. The other half, they won't. They'll buy a business to own, and they'll have a GM or an operator inside of that business every day. So, for example, the deal I've just done in LA, there's a fantastic GM in that business already that didn't want to own the business, just wants to run it. And there's a fantastic head of sales that's very, very capable and can run the sales operation. And in fact, the owner, who is kind of retiring, she wants to work for a year to help scale the business as well. So what's important when you're an owner investor and you're not an expert in that sector is making sure that you either partner with somebody that knows how to run that business, or the business has got good people inside of it, like a GM or a salesperson that kind of really knows what they're doing. And if you don't have a partner to do the deal with you, and you don't have solid people in the business, because all those skills were the seller and the seller's going to go, then it's pretty easy via LinkedIn or your personal network to bring somebody in, to be the general manager, the GM of that business. And guess what? Because you've basically bought your equity for free, you can give some of it away to a GM, 10, 15, 20%. That's what I normally do. Then that person's your partner in the business, but they're driving the other 80%, which is your value.
Hey, I want to interrupt this episode real quick to talk to you about Nate Armstrong, our sponsor, Nate Armstrong. He's with homeinvest.com, and you want to get to know Nate. So go to homeinvest.com and just connect with Nate, talk to him, learn about his operation, what he's got going on. He's a turnkey provider, and it may not be right for you, but it could be the perfect fit. So it doesn't hurt. It's a free call, consultation, just to figure out, what they do, what they have to offer. And worst case is you're going to meet a great person who's really well educated in real estate. He's done a ton of different real estate strategies, and probably is going to teach you a little bit, even on a short conversation with him. So go to homeinvest.com and connect with Nate's company. You're definitely not going to be disappointed. It's worth it. So thanks, and we'll get back to our show. When you do something like that, what's your day-to-day, maybe not even day-to-day, I shouldn't say, what's your involvement, monthly, weekly, quarterly? What kind of involvement do you have still?
Great question. So one of the things that I do, and I coach all of my network through this as well, is I have a great, what I call a KPI dashboard. So what I do, I own all or part of 17 different businesses in Canada, US, UK, and Australia. And what I do is, I used to do this myself, but now I don't. I have partners in my investment company that have these conversations. But let's say, Todd, you went out and you bought 5 businesses. So every day, so Monday, Tuesday, Wednesday, Thursday, Friday, you'll probably spend a couple of hours, in each of that day on one of your deals. So you'll have 1 hour kind of reviewing, kind of the weekly numbers, weekly sales, weekly margin, weekly cash flow, all those different things. And then you'll spend 1 hour a week just talking with your GM, figuring out what's going on in the business, where do they need help, just making sure that, they stay on track. Then what I do is, on a monthly basis, I have a virtual monthly board meeting. Sounds very grand. It's just a couple of hours where the key members of the team and I and some of my other partners will get on a Zoom call and we'll go through, what was our forecast for the month? What are our results? What were the gaps? What were the pluses and minuses? Where do we need to change tack? Or what are some of the other opportunities that we should be doing that we're not, and then what things are not working and we need to fix, plus, any other business. So we do that on a quarterly basis, on a monthly basis. And then every 6 months, as a maximum, I will go and spend half a day in my businesses. So I'm about to go on tour. So I'm going to Europe next week, to Portugal, to check in on my vineyard and my hotel. And then I go to Orlando, and I'll spend some time in my businesses in Florida. And then I go to Australia in early September. I've got 6 businesses down there, and I'll spend half a day in each. Just having that kind of FaceTime doesn't need to be every week or every month, but once every 6 months, just to get in there and just put my finger on the pulse of the business again, and just make sure that everything is proceeding according to what I'm seeing in the weekly numbers and I'm hearing on those monthly calls.
Sure. Yeah, and I would think it'd be important to make sure that the GM, anybody who's kind of in charge and running that business, knows that you're serious, that you're keeping an eye on it, that you want the success as well, because I think that's some accountability that you're holding them to as well. I would think that's really beneficial.
Yeah, absolutely. And what I typically do with my GMs is I'll start them off on 5 or 10%, but then I put plans in place where if they can grow the revenue by X and cash flow by Y, I ratchet up their equity.
Yeah.
So in one deal that's gone so well, the guy now owns 45% of the company, but he's created $7 million worth of shareholder value.
Yeah.
So he's grown my value without me having to do anything. He's made himself a lot of money, but it's only by his own actions and following the plan, so to speak. Yeah. So there's a big thing to say in this business where you've got to share the love. Some people will do a deal and they'll think, I don't want to give any equity away. They'll bring a GM in, they'll kick and beat that GM hard and fast, and then they surprise when the GM leaves and goes into something else. If you incentivize them in the right way, they're going to be a true partner for you.
Yeah, that makes a lot of sense. Well, very intriguing, the business. So you're spending 65 hours a month, roughly, on the business. 60 to 65 hours a month on the business.
Probably.
Yeah. And I'm sure that varies, and I'm sure maybe a little bit less for you, as now you've scaled and can hire other people to do it. But yeah, somebody's got to spend some time making sure, overseeing the overall business. So let's shift a little bit. What's maybe a biggest mistake in this kind of investing business that you've made, and how did you learn from it? How did you grow from it?
Yeah, so I got a great cautionary tale for that. So this was a very, very large deal. This was a very large corporate uniforms company that I acquired back in 2011. So I bought it with my business partner. And this business was doing about $18 million in revenues, making about $3 million in free cash flow. And we bought that business on 100% seller financing. So it was a great deal. And over the kind of first 2 years of owning that business, we were making some really, really good money. Obviously we had to pay the seller, but we were generating 7 figures a year just in personal income from that business. Yet we had a great GM who we gave 20%, who was doing the day-to-day stuff. So that was great. And then about 2.5 years in, we got a phone call from our big competitor that was like 5 times the size of us. And they made us a very attractive offer to buy the business. And we turned it down. We thought, you know what, we're crushing it, we're having a lot of fun. Let's keep scaling. If we grow this by 50% in the next 2 years, we can double or triple, our exit. So we turned it down. And then what happened was about 2 weeks later, our largest customer got into serious financial difficulties. They They were 40% of our revenue, but they were 90% of our free cash flow. Very high margin business. They got into some crazy difficulties, and they pulled the contract. So overnight, the business dropped 95% in value, and we built it back up a little bit, and then we ended up selling it for less than what we would have got. So, the big lesson in the cautionary tale is, once you buy a business and you grow it, and somebody comes in with a really attractive offer, be a seller. Sell, take the money, and then go and rinse and repeat. Go and find more deals to do. That would be my advice.
Yeah, that makes a lot of sense. I mean, once you've squeezed out a lot of that equity that you planned on doing, sell, and like you said, rinse and repeat. So cool. What was the mind shift from you becoming an entrepreneur? You started out in the corporate world, and what was that mind shift, or maybe you already always had that of becoming an entrepreneur?
So it's interesting. My first ever venture into the entrepreneurial world was actually when I was about 12. My father was the GM of a brewery in the north of England where I was born, and he used to come home on the weekends with trays and trays of alcohol for his buddies and trays and trays of soda drinks for me and my buddies. And what they noticed over about a 6-month period, especially through a very hot summer in the early 80s, is that my buddies and I were going through 250 cans of this soda every week. What they didn't realize is me and my buddies were selling it to all of our friends. And in the UK, we have things called ice cream vans. These little white vans that drive around playing a tune.
Yeah.
They sell ice cream and drinks. So we would drive around the neighborhood on our BMXs with all this soda in our bags, and we'd just wait for the people to be waiting for the ice cream van because they used to come around at a certain time.
Yeah.
And we'd go, we'd sell them pop, and then we'd disappear. And that taught me a lot about supply chain and about finding a hungry crowd of customers and giving them what they want. So that was my first business, and then I sold that business because the ice cream guy found out that I was the mastermind of this venture that was killing him, and he came round and he offered, gosh, must have been $100 in US money. He offered me $100 to stop doing what I did. So that was my first sale. I sold my first business for $100, and then I just got into school and college and went into the corporate world. And what took me back to being an entrepreneur was when my son was born, because whilst I earned a lot of money in investment banking and mergers and acquisitions, what I really wanted, it wasn't the money. Most people become entrepreneurs for the wealth. I didn't. I already had money. I did it because I wanted freedom.
Yeah.
I wanted freedom to work for myself, do my own thing, and knowing that all of my skills and my efforts were going to create equity value. They weren't going to create salaries and bonuses for me whilst working for other people. So it was really that shift with my son, almost missing him being born, wanting to be around him and wanting to be a father where I could see him every day. I wouldn't be on planes. And whilst, I do travel quite a lot now, my family, they do come with me. I time my tours when I go and look at my deals. I time those when, my son's on school break. My wife doesn't work. So, they come with me. So they're with me in Portugal, then they're coming with me to Florida. They'll come with me to Australia. So it's great. It's that's the lifestyle that, that I wanted. And, that's why I became an entrepreneur.
Awesome. What's a goal moving forward? Kind of maybe 10 years or 5 years from now, what's going to look like?
So my goal in the next 5 years is to scale my coaching program up to about 5,000 people.
Okay.
And then from that, eventually have a group of about 100 different businesses. So these are businesses that I'm invested in through the people in the program. but I don't have any day-to-day responsibility, and I don't even really have any oversight. I'm like the chairman of a private equity firm with all these partners who are managing all those different portfolio businesses. So that's my, that's my kind of 5-year goal. That'll take me into my early 50s. And then, who knows? My wife said to me only yesterday, in fact, went out for dinner, and she said, when are you going to retire? I said, I don't know. Well, not now, because I love what I do. I love what I do. And there's two things that really, make me proud of what I do. Number one is I'm solving a major problem for sellers that I'm training and mentoring buyers to be able to buy their businesses successfully and let them retire. But then secondly, I think I'm changing the lives of a lot of people that are maybe stuck in a 9-to-5, or they're locked in a cubicle, or they're like I used to be. They're working really hard and they're not having any skin in the game. I'm turning those people from employees to employers. So when you bring all that together, it's a pretty good feeling.
Yeah, absolutely. That's awesome. Well, couple little quick questions before we wrap up. What's a favorite book, or maybe book you're reading right now that you're really enjoying?
So I'm a huge bookworm. I read 2 books a week, and I'll give you 2 recommendations. So the first one is the E-Myth Revisited. That's my favorite book that I've ever read. Absolutely incredible book. And that tells you why 96% of startups fail inside of 10 years. And I use a lot of that in my messaging. I say to people, don't start a new company. Go and buy a company that someone's built and has survived but doesn't want anymore, and use the business's cash flows to fund it. If you wanted to buy a Tesla, you wouldn't go out and buy the wheels, the battery, the roof, the leather, the seats, and build it yourself. You'd go down to the Tesla dealership, you'd buy a Tesla that they've built, and you'd finance it. That's exactly the same thing that we do. So E-Myth's a great book. My favorite book on what I do is called Barbarians at the Gate. And it's interesting. Like I was on a radio interview last week in LA, and somebody said to me, how can you buy a business without spending your own money? Surely it's for like mom and pops. And I told the story of the $25 billion acquisition of RGR Nabisco in 1987, which was at the time the 19th largest company on the Dow. And the guy that bought that, Henry Kravis, big private equity investor, he bought that business without spending any of his own money. So no cash down deals or leveraged buyouts, which is what Wall Street call them. Yeah. They work on mega deals as well as small deals. But that book is fascinating. It's the story of that deal and how it happened. And it was written by 2 Wall Street Journal reporters that basically covered that entire transaction. It's a fascinating book. So anybody that wants to get into deal making or buying businesses for a living, I highly recommend you read Barbarians at the Gate. And then for anybody that's on the fence about why they should do that, read the E-Myth. Don't start a business, buy one instead. It's much, much safer, far less risky.
Yeah, well, it makes sense. Yeah. You got something that's already established.
Yeah.
So they've already got clients. They've done a lot of the work for you. And now you just need to just increase that business. So last question, what are your 3 pillars of wealth creation?
So my 3 pillars of wealth creation is, number 1, buy assets that can give you a yield.
Yep.
The 2 is if you own a business, and the tendency, if you're a business owner, is to take as much money out of that business every month, every year to fund your lifestyle. Whereas because businesses are worth a multiple of your free cash flow, the more money you leave in the business, the leaner you make it, the more valuable it's going to be over time. So then when you buy it, grow it, and you sell it, you make a lot more money, from doing that. And then my third pillar is to diversify. I trade Bitcoin. I do own a little bit of real estate, but not crazily. I do invest in other things like artwork and jewelry and other things like that. And obviously a lot of businesses. So I'm fairly well diversified. And a lot of the businesses that I'm invested in, they're all in very different sectors. So if one sector, totally blew up, my other 16 businesses would be fine. So I guess what's coming out of that, it's all about diversification.
Yeah. Cool. How do people get in touch with you, learn more about your, coaching program, just be able to talk to you?
Sure. So what I've actually done, Todd, for people that are interested in, this way of life, I've actually put together a pretty amazing 90-minute training webinar. It's an automated webinar. So it's at ninjaacquisitions.com/free. Go to that, opt in, and you can watch the 90-minute training, over and over again. And there are hundreds of people that have been to that free training. They've gone away, they've implemented it, they've bought businesses, and then they've emailed me back to say, hey, I've done this deal. So they've not come into my coaching program where they get the intensive kind of training and all the various tools that they need. They've actually gone on, they've watched that training, they've downloaded the kind of couple of things that I give away, and then they've gone and they've done a deal. And I absolutely love that. I love getting those testimonials. So ninjaacquisitions.com/free. Watch the training, download the stuff, and go and buy a business.
That's awesome. Well, I appreciate you doing that, and we'll link that on the show notes for all our listeners too to check out. So awesome. Well, Carl, I've appreciated and enjoyed this conversation. It's been a lot of fun. I think what you do is very fascinating. It's similar to what I do, but very different as well. So it's been a lot of fun to talk and to learn kind of about your business and how to operate successfully as well. Well, sir, that's it. And you have a great, fantastic rest of the day. And
thank you.
Yeah, we'll maybe catch up on a podcast later in the future.
Absolutely.
Hey, special thanks to Carl Allen for joining us on the show. That was a lot of fun for this episode. Really different from a lot of the other guests I have. He's basically doing what I do, but he's buying businesses, which is very fascinating to me. I actually have thought a lot about doing something like that. So I might have to, talk to Carl a little bit more and try to get in on kind of what he's doing as well. So I think it's just really fascinating, especially buying these businesses with essentially very little to no money out of your pocket with, doing seller financing. I think is really cool kind of strategy that he's got going on. So a few things I took from this, he talked a lot about creating those systems, which we hear over and over, creating systems to make sure that you're going to be able to run efficiently. And he also talked a lot about getting the right people in place, which we hear again over and over. But it's so important. It's worth mentioning again, and probably many more episodes too, is getting the right people in place. I mean, he's not able to own as many businesses as he owns by being there every single day. So he's the general, he's the chief, but he's overseeing it from afar, but he's got the right people in place. He's got the CEO. He's got the right people in place on the day-to-day. The other thing, he talked about, and I thought was really important is with the business, selling on your benefits and not on your features. So I thought that was great. A lot of people try to sell on their features, not on the benefits of their business. And the last thing, which I preach as well, is buy assets buy assets and diversify with those assets. So again, appreciate Carl joining us. Make sure you definitely check out what he's got going on. He's got that webinar, that free webinar at ninjaacquisitions.com/free. You can check him out there, or check him out just on ninjaacquisitions.com. He's got a lot of cool stuff going on. And then go onto our, Facebook page, check us out there, give us some feedback, let us know what you want to hear about, what you want to, we do the Hump Day Hustle every Wednesday, and we talk about various different topics. So if you want to hear about something, we'd love to kind of cover that for you and hear, and either teach you what we know or find the answers to what we don't know, or find somebody to interview that knows it better than us as well, or can really answer the question properly. So go on the Facebook page, or YouTube. You can give us comments on YouTube and SoundCloud as well. And then don't forget to subscribe. Go on to iTunes, subscribe, give us hopefully a 5-star rating review. And let us know how we're doing. And you can go on our website, pillarsofwealthcreation.com, and there's a ton of value there as well. That's it. I'm Todd Dexheimer signing out. Make every day a Saturday. Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.